Okay, let's walk through defining exit and entry criteria for your trades. So the first step, and it's very important, stop the trade and pray. So what's that, you might ask? It's when you enter a trade and you pray for profits as your plan. It ends in disaster nearly every time. So try this instead, an actual trade management plan where you actually have a defined entry model, a defined target, and a reasonable assessment of direction from your macro analysis. Okay, so let me show you how this works. Let's go through a trade that I marked up on my chart from earlier today. So after my post my macro analysis, pre-market, I had an assessment on the day that I was expecting higher prices. Given where the market has been, retraced, and where we're going, my expectation was higher prices. So I'm looking for bullish long trades to begin with. Okay, so now we assess the opening range. The opening range confirms my bullishness by a break out of this soft trend up that you can see on the 10-minute. You can see it on the 5-minute. And then we break out again right here, and then we range sideways for a period of about 20 minutes or so through that opening range. And it creates this shelf right here. You can see 1, 2, 3, 4 bars are sitting here on a 5-minute bar. You can see that through about 20 minutes, you create this shelf that looks like it's about to break out. You can see demand building. You've got nice solid delta building across the macro. You're seeing delta build across bar to bar. You got this big delta doji here that failed to move down, that built 3,000 worth of delta in the bullish direction. This delta continued. This one was really weak. It was a weak rotation down. And then finally at this 9 o'clock bar, we got the big signal bar here at 55.75 on delta. There were 5,575 more aggressive bullish contracts that went off in this 5 minutes than there were sellers. So you see this big imbalance shoot up here. You can see the imbalance is building here, here, and here. And then you see it shift upward right here at this breakout. Okay, so now what? I've got my direction confirmed. I've got my macro direction confirmed. I've got my deltas are confirming. We're all going in the same direction. Now I got my entry model starting to break out. My breakout entry model here is now getting confirmed. So let's move to the next bar. So the next bar right here, we open right here. We shove down first. We retest. This is part of one of my trade entry models that I have, is a breakout, a violent candle breaks out of a range, pulls back to the origin of that breakout, which is right here, and then carries on forward. Okay, that's one of my favorite trade models that I have. And you can see it building and building and building, and then we pull back here and we touch, and then as we cleared this POC of the prior bar and this delta stack right here, you can see that I entered right about in the middle of that and got in, and then I immediately upon this moving upwards, I got out with about 75% of my trade after 12 ticks to pay for that trade, okay, of my position. And then I let a runner go. Why did I leave a runner go? Why didn't I just exit my entire position? Because my entire trade plan revolved around that entry model with a solid target, which was in a realistic range. And that realistic range was this prior day high bar, or a red line right here, which was about 9 S&P points away. Was that realistic? Correct. It's very realistic. So I let a runner go, and I got out, not at this bar, but as this bar started to come back down towards this POC, I got out right here prior to hitting target, but a good 7.5, nearly 8-point move on this range. Okay, so let's recap. I had clear direction, confirmed both on macro and micro. I had my breakout model confirmed and triggered, and it was also supported by bullish order flow imbalances. And I had a known price magnet for a target within a realistic range. This is a clear, risk-defined trade management strategy. If you want to increase your win rate and your profitability, stop the praying and start planning your trades. Hope this was helpful. Thanks for watching. We'll catch you next time. If you like this and you want access to the tools, check out NinjaTrader's Fast Track with the link below.